Right now, in late July 2013, everyone's still all of a doodah about China and the leadership's attempts to, well, very serious attempts to rejig the economy, which is going to be a very good thing in the long term. They're going to make interest rates more realistic, and so that capital goes to efficient private enterprises rather than the fat, inefficient state-owned enterprises which have been guzzling capital up until now. This is going to mean that China will be able to maintain a very snappy rate of growth for maybe another decade or so. The problem is what's going to happen now in the next 6 months to a year. And just in the last few days, the leadership has announced plans to protect their stated minimum growth rate of 7 to 7.5%. And to the items on the agenda, one which I love is that they're going to ban the building of any more government buildings. So that puts one kind of a limit on bureaucracy. And the other one is they are going to build more railways. As you know, in the hinterland and the north and the west, they've got vast open territories, and they're very sparsely covered by rail up until now. So that would be good for their steel consumption, which of course everybody is saying is going to diminish owing to the general thrust of moving China from a fixed investment-based economy to consumer-based. So all of that is going to happen. It's a very good thing, incidentally, that diversifying their economy and raising the level of consumption, and interestingly enough, allowing interest rates to find a real level will greatly help in that respect. So China is clearly the swing factor in most economies. Other than that, we've got maybe just the first signs of green shoots in Europe. There are persistent reports that things are looking a little bit better, but you know, no one's about to hold their breath, but that may happen. Certainly doesn't look as though it's going to get worse. The UK today has come out with better looking numbers, and America continues to improve slowly but surely. So the outlook for commodities is very definitely dependent on global growth showing some kind of an uptick in the next year or so. Right now, most of the commodity shares are pricing in a late resumption of commodity demand. In other words, they're pretty cheap. So the question is whether you buy now or you wait 6 months or maybe even longer. As regards what one should be buying now, start with a really big gorilla commodity, which is iron ore, the price of which has held up quite well, around about $130 recently, and there have been enormous number of forecasts to the effect that the iron ore price will decline in the second half of this year. We've already nearly finished 1 month thereof, and go down as low as 90 or so, on the basis that the Chinese have been restocking recently. Their growth is going to slow down, and of course there's enormous increased supply coming on stream, in particular the likes of Billiton and Fortescue and Vale and Rio Tinto and so on, increasing production. So the thinking is that the iron ore price will go down. So maybe one's got to be a little bit cautious about your pure iron ore players like Kumba. Other alternatives, if you want to sort of hedge your bets a bit on iron ore, are, well, first of all, Assore and Assmang. Assore and ARM, which have 50% each in Assmang, and that's the iron ore and manganese ore producer. And ARM is a little bit more diversified because it also has coal interests, copper, gold, and platinum, and nickel. So if there's going to be commodities recovery in general, ARM is quite well placed, and the market tends very often to undervalue that share in relation to iron ore. And by the way, manganese ore is an interesting one. That price collapsed in the Great Recession and picked up very little compared to other commodities, and is now at a level where they can make reasonable profits. And were that to show a decent improvement, that would also be quite a nice fillip to those two companies. Now, Exxaro is also quite an interesting player on iron ore because, of course, it's got a big slug of Kumba, and it gets a great big fat dividend every year. which it puts to good effect. And of course, it's one of the biggest coal producers in South Africa. And when Medupi finally comes on stream, they will be selling 14 million tonnes per annum to Medupi, which will be a very nice addition to their coal revenues. And then, in addition to that, they've got a very nice iron ore mine in West Africa. It's going to be highly profitable. I think they're starting with 5 million tonnes. It's coming on stream in another year or so. They've also got programs in renewables, and I think one has to credit them for their imagination in that area. They've got they've got good partners. Synergy's the one enterprise, and then of course they've got Tronox, where they've got about 46%. I think that's listed in New York, and that's mineral sands. And that's reportedly going to will have had a quiet first half of 2012, but should be picking up somewhat in 2013 and show growth from then on out. Now, if Tronox were to begin firing up, that would be a very good, how should I say, unexpected contributor to Exxaro. So that's an interesting one. At these levels, probably still quite attractive. And then on the other companies which come to mind, let's say in the sphere of ferrochrome is Merafe with its joint venture with Xstrata. The ferrochrome price has been reduced a little bit because of the global trends, but also the fact that its customers are keenly aware that they would have benefited from the weaker rand. But on balance, they were probably year on year, the rand price they're receiving is probably still a bit better than it was a year ago. Their problem, of course, is the high cost of power, but they do have a competitive advantage in that the technology project line that they use, their Primus technology definitely gives them a competitive edge, and they had this in place even before the crisis in power. So that was a tribute to their far-sightedness. Now that is a share which will probably languish for a while. What it really needs is for your steel price to recover, and then dragging up the price of stainless steel in its wake, and then ferrochrome, and of course you need a weakish rand. So it's very geared to all those kinds of factors, and right now it's probably not going to do very much. We're talking about steel. We've got our two local producers, ArcelorMittal, which has had a negative news flow for as long as we can remember. In other words, about the last 6 years or so. It's continually being attacked by government for various contraventions of competition legislation, and the government simply doesn't like its import parity pricing model. Of course, it's had some production glitches, hiccups, and accidents. So it really seems as though just about everything that could go wrong has gone wrong. Now, for that very reason, it may be fairly attractively priced, because the global steel prices have come off tremendously in the first half of this year, but are showing some signs of picking up. And eventually they will pick up. And surprisingly, a good slug of their production does actually go to export, and to a large extent into Africa. So given that Africa is the growth theme, the one area of the world that almost everybody's optimistic about, with sub-Saharan Africa, excluding South Africa, reputed to be growing at over 5.5%. So, and by the way, our own economy will eventually recover, and so it is probable that steel prices will pick up and volumes will pick up. They've been very low, so on that basis there should be some recovery over the next year or two from ArcelorMittal, and for very similar reasons, Evraz Highveld. By the way, the deal which they have negotiated, well, it's a non-binding sort of letter of intent, values the share at, current exchange rates about 32 Rand. Now the market obviously isn't really believing that, because nothing much official is known about the entity that is reputedly going to buy it, but it does seem to be possible that it has connections with the IDC, maybe even the government, in connection with the IDC and the government's oft mooted intent to start its own steel company. Now, to start from scratch with a wee grand, importing all that heavy plant and equipment would be very expensive. Maybe they are taking the view that they'd start by getting a ready-made operation like Everest Highveld, and the Russians certainly don't seem to have achieved whatever objectives they might have had when they bought into it about 5 or 6 years ago. I think they paid 65 Rand, 85 Rand, way above the current share price. So that's steel, which is interesting. Then you've got rats and mice. You've got what have you got? The small coal producers, incidentally, some of them are showing signs of being able to make a lot of money out of Eskom's affirmed intent to buy a lot more coal from smaller producers. Two that come to mind are Keaton and Westco. They seem to be getting their act together. They've got nice contracts and they're actually making good money. And then Metmar is one. A few years ago, one had hopes of there being a mini Glencore, but somehow they haven't really managed to get onto a solid growth tack as far as their commodity trading side is concerned. They have some interesting projects which they are developing and trying to monetize. So there is probably value in that share at the moment, but I think one can afford to wait until the next set of results and see what's happening on the trading side first. Hulamin has got a state-of-the-art plant, and it's very much its fortunes are very much linked with the aluminium price, which has been very much in the doldrums. But be that as it may, they're also very much rand sensitive, and perhaps more importantly, they've signed a contract recently for the supply of aluminium for can ends. Now that has got great promise of increased offtake, and their other businesses, other products also show promise, and they recently expanded capacity. 250,000 tons, I think, is the rated capacity at the moment, and they still have quite a way to go to get up to that. What the market is going to be particularly interested in, however, is a resolution of the uncertainty around the supply of aluminium slab from Billiton, which of course which wants to close down one of its smelters in KZN, and there have been big discussions between Hulamin and the IDC, Billiton, and maybe some other players as to how to solve this problem, because it would be very unfortunate if Hulamin's potential was to be significantly reduced owing to the lack of a local supply of raw aluminium.